Hi, everyone. Good morning. Thanks for joining me. Good to see many of you again. This is one of my favorite events, and the Ethereum community is kind of where Chainlink started out, the first chain we provided data and other key services to. So I'm really thrilled to be back here with you. I think we all agree that our industry growing is a great thing, and that the thing that we all need for our industry to grow is the inflow of capital. And so our focus and my focus right now is how do you get more capital into the blockchain industry, into the Ethereum community, into DeFi. That's what my talk today will be about. I think everyone is starting to realize that the amount of things that can be tokenized and put into decentralized finance protocols such as Aave for lending purposes is very, very far beyond where we are now. Right now, we are, in my opinion, at sub 1% levels of everything that can be tokenized. And the transition we're really going towards in the world and our industry is actually all of this being tokenized. So this huge amount of assets becoming tokenized is really what this is about. When that happens, the cryptocurrency or blockchain or digital asset industry, depending on who you are, will be about these tokenized things. Our industry is fundamentally defined by the highest value thing that it represents. Right now, that's cryptocurrencies, but even if cryptocurrencies triple, or even if they frankly 10x, and Bitcoin goes to $1 million and Ethereum goes to whatever it goes to, you still have a huge gap between that market size and the market size of everything that can be tokenized. And so what you're really going to end up in this industry, if it reaches even a third of its full potential and mainstream adoption, is the tokenization of the real world, whether that's fiat currency and stable coins, whether that's the asset management industry through funds, whether that's real estate, whether that's perps and derivatives. That's where we're all going. That, in my opinion, is the reality of what's next for this industry. And so I think that the Ethereum community and all the people building infrastructure and applications should be building towards this reality, because in my experience, reality is inescapable truth, right? It's going to happen whether you're a part of it or not, and it's much, much better to be part of it. Chainlink currently powers the majority of DeFi. It's powered the majority of DeFi since its inception. It's done that by providing lots of critical on-chain inputs, messages, data, cross-chain connectivity, and other key capabilities that make DeFi what it is today. So the Chainlink ecosystem and the Chainlink standard have been adopted as the reliable, secure method of proving things to DeFi, proving things to financial applications on-chain, and making sure that they're reliable enough to accept users' money. Before Chainlink, DeFi was at sub 100 million, and after Chainlink, it grew to over 200 billion, and has now surpassed that recently again. The thing that I've realized, and I think the Chainlink community has realized, is that you have a lot of nuanced problems when seeking to solve this. And the value that you get from solving these problems continues to grow in proportion to the amount of these problems that you can solve. So far, Chainlink has enabled over $22 trillion worth of transaction value. That is primarily in DeFi, but now we are seeing a shift of that being in DeFi and in TradFi. My view is that TradFi and institutional capital is what is going to feed the next stage of growth of our industry. The retail adoption of our industry can go from 3.5 trillion to 7 trillion to 10 trillion. I'm not really sure it's able to go beyond that. And that's just based on the fundamental math of where all the money is. And where all the money is inside of institutions. Pension funds, family offices, sovereign wealth funds, and their related asset managers and banking partners. So if our industry wants to grow and go mainstream in terms of the actual numbers that matter and how the world actually works, it needs to interface with the blockchain world together with the TradFi world. In this example, we have something that we released last year with UBS and SBI on 2 EVM-powered chains. One is Ethereum mainnet, the other one is Arbitrum. This is for fund tokenization. And what I'd like to call your attention to is just how many things are going on here. So you have the writing of data in to a transfer agency contract. You have cross-chain connectivity across 2 chains. You have synchronization back to UBS's systems. This doesn't even show the stablecoin payments flow that was involved here. And future versions of this will have a dimension of identity. So the amount of complexity that needs to be solved for this institutional capital to flow into the Ethereum ecosystem, into the blockchain industry, is much higher than the complexity that needs to be solved for a basic DeFi blockchain transaction where I send you 3 cat coins, you send me 5 dog coins, the Bitcoin price goes up, and we're all very happy. It's a bit of a different situation where nothing here can happen without 3 or 4 critical dependencies, where you have to prove identity, you have to prove market data, you have to connect to chains, across chains in a very compliant way where you can prove security. Here is another example that we released recently in a report with Visa. This is ANZ Bank, the largest bank in New Zealand, second largest, I think, in Australia, basically converting their stablecoin into something called EHKD. EHKD is the blockchain-based CBDC of Hong Kong. Then moving that blockchain-based CBDC across to another chain, in this case, an Ethereum testnet, for Fidelity International to then generate a tokenized fund, which once again requires data, and send that tokenized fund back over to the bank, basically allowing their client to purchase a tokenized fund, starting out in one stablecoin, ending up in another stablecoin, going across chains, relying on critical data to value the fund, and then sending the fund back over to the client at the banking institution where they bought it from. And this is also a cross-border transaction. And I think you all know that the globalized nature of our industry is what makes it very powerful. It's that you have access to global capital markets, not local capital markets. That's a very fundamental advantage, that when you launch a high quality financial product on chain, you're accessing a global market and a global pool of liquidity. Whereas when you launch something in the TradFi world, you're usually accessing only a very local market, which is a kind of indisputably very large advantage, and why sometimes asset prices in our industry kind of outstrip reality. Now, in order to do all this in a compliant way, what I showed you on the previous diagram, we actually have now released at this conference a new compliance standard. That compliance standard enables on-chain identity with something called CCID. CCID is able to take in off-chain credentials and put them on-chain in a portable cross-chain identity that can be appended to tokens, transactions, assets, and allow them to be frictionlessly moved and transacted against. In that previous example, it wasn't just about cross-chain and it wasn't just about data. There was also a dimension of compliance where identity information had to go cross-chain. This is really the final building block in unlocking all this capital and enabling huge amounts of institutional capital to flow into our industry. And it's just important for all of us to understand, I think, that if you want to work with this institutional capital, you have to meet their requirements. It's not going to be optional. There isn't going to be a meeting where you get to not do compliance, or you get not to connect into their systems in a way that they found to be secure or that their regulator approves. And so what's going to happen now is pretty simple, is that the volume and size of that capital will be such a huge advantage to those that get it, that everybody that wants to remain competitive will have to get it. And to get it, you will have to meet certain requirements. I'm kind of here telling you this, for some of you, very obvious and logical and comfortable truth. For some of you, this may be uncomfortable truth, but it's the truth. And if you want to get ahead, my advice to you is to prepare to deal with institutions in an efficient way that allows that capital to flow towards your protocol, your project, your system. And we are very happy to help enable that, because once again, we are super interested in the growth of our industry. And this is where the growth will come from. There's another dimension to the compliance standard, which is policy management. It's that standard that allows you to not only have identity, but to meet certain conditions, policy conditions of the bank. You will have certain policy conditions that their transactions have to meet with you, and they will have certain policies and conditions that your transactions have to meet with them. And this is where you can define it. It has an off-chain execution component. It has an on-chain execution component. It needs a source of identity, so we made the cross-chain identity standard. And it's compatible with CCIP for cross-chain sending of the compliance with the policy, as well as the related identity data. Because these transactions will be cross-chain. The two I just showed you were cross-chain. This basically makes the Chainlink Automated Compliance Engine, which is a collection of standards around identity, management of policies, both your policies towards them and their policies towards you, data management, which is related to prices, NAV for fund tokenization, and so on, as well as alerting and reporting back into your systems and back into their systems. It's all compatible with the standard digital assets like ERC-20, ERC-3643, who are actually a launch partner for this compliance engine, together with Apex and the LEI, the Legal Entity Identifier, who we will hear from a few minutes, their CEO, Alex, who will describe how this works. The LEI is the largest source of organizational identity in the capital markets. It's actually legally required in order to conduct transactions in regulated capital markets. And so if our industry is going to get that regulated capital markets institutional capital inflow, which, believe me, whether you want it now or not, you're going to want it. It's going to be like BlackRock all over again, just 1000x, right? A month before BlackRock makes Bitcoin more successful, everyone is like, oh my God, BlackRock, not so good. A month after, oh my God, they're the saving angel of life. So just get ready for much more of that. And my advice is, once again, get set up to benefit from that dynamic. I wouldn't ignore it. Now, what this ends up doing is it ends up making the institutional world and the DeFi world compatible. It breaks down the barriers that are there for institutions and DeFi protocols such as Aave to do transactions, because all the building blocks are now there. You have the data building blocks to prove things about the assets, such as the price or the proof of reserves or the net asset value or a number of others. You have the cross-chain connectivity to actually conduct the transaction between chains. And now you have an identity standard together with a compliance engine, together with connectivity back into the systems that need to be connected to for compliance to work. So this is the final problem. Compliance is related to this problem that we all hear about, which is the legal limits of our industry, or the regulation. This is how regulation is made useful. Or whatever the regulation is, this is how it becomes useful to you, in that it is able to properly execute transactions with you and institutions. And so proper regulation will actually be a very good thing, because it'll unlock this capital. And once it unlocks this capital, the question will be, well, how do I interact with it? And then when you ask that question, the answer will be, oh my God, there's all these conditions I have to meet, like identity conditions and security conditions and other kind of requirements that are actually imposed not by the bank, but by the regulator on the bank, and therefore onto you as well. And then the sheer size of the capital will be so unbelievably attractive that you will do it if you want to be competitive. So that's what we're here to help you do. We're here to help the community, the blockchain industry, solve the problems that they need to solve in order to grow and be successful. And I'm thrilled that we have the opportunity here to work with some of the great partners like Apex, the 3643 Foundation, and the LEI. Now I'd like to call Alex, the CEO of the LEI on Chain, and he can tell you from a TradFi perspective, how this looks and how it works. Hi, Alex. So, Alex, you've worked in capital markets now for many years. You worked at SIX, the largest exchange in Switzerland, and doing some of the most exciting things in Europe. Now you're the CEO of the Global Legal Entity Identifier Foundation. I got it right. Absolutely. Which is providing the largest identity standard in the capital markets. Could you explain, to me and to the larger Ethereum community, why is identity such a hard requirement in the capital markets, and why complying with identity and automating compliance around it is going to be useful for this group?
Sure. So compliance is the reason, right? So regulated financial institutions cannot act without knowing who they're dealing with and what they're dealing with. So the who is the counterparties they have, their clients. They need to absolutely be able to identify them in a verifiable way. And what? It's the instrument they're buying. They need to understand who is the issuer behind a specific instrument, who is in charge of that fund, for example, who is the asset manager, the transfer agent. So all that ecosystem needs to know each other, to trust each other. And when you move that on-chain, you're kind of losing that visibility of who and what you're dealing with. And that's why identity and what you're doing with us is so important.
Yeah. In my experience talking to many of the largest institutions, and I think some of you might have seen our implementations with some of those institutions, many of which are now on production and not just in POC pilot stage, I've found that compliance is a very powerful group. And it's a legally required condition that if you don't fulfill as a managing director or whoever, you won't have a job. Like the people who mess around with compliance don't have a job for long. This is just something that the DeFi community doesn't deal with, doesn't have to deal with, hasn't had to deal with. But once again, I am here to help you folks in our industry, and our community is here to help you deal with the new, sometimes difficult realities that our industry has to deal with. But those of us who can deal with those complex new problems will be much more successful as a result, in my opinion. Because Alex, what have you seen? Have you seen that, you have a lot of institutions that you work with. Your organization is actually overseen by 70 regulators, including the SEC and a number of others. So all the world's regulators basically oversee your institution, and therefore all the world's institutions, come to you and talk about their plans. Do you see an increase in the amount of institutional capital that wants to move towards, the blockchain industry and the DeFi community?
Yes, clearly, and you can see that by the fact that now you have regulation in place to enable that move from of capital from traditional to new finance, as I call it. And their challenge remains scalable compliance, and that's really the main blocker, in my view, in terms of moving assets from where they are today to blockchain. They've been attempts, like whitelisting of wallets, for example, to ensure that you're not delivering assets to the wrong wallets. Platform-based KYC, but locked into a specific platform and doesn't work elsewhere. So they are interested, but they're still very, very, very worried about how compliance can be made efficiently on that type of technology. And I think, again, one way of doing that is ensuring that the identity system they already know and use in traditional finance can be reused on blockchain and on infrastructures like the ones that these guys are building with you and with other partners.
Yeah. So I've seen the same. There are already extremely high quality standards. The LEI in most developed capital markets economies governed by those 70 regulators, the LEI is actually legally required. By law, you have to get an LEI in order to transact. So I think there are already really high quality identity standards. Your identity standard has taken it a bit further with something called VLEI, Verifiable LEI, which is what we integrate with. And that integration, I think, proves that these standards can be made compatible. Putting these compatible standards onto the blockchain is actually, I think, a double benefit to our industry. One benefit is that it allows compliance to happen and it allows transactions to work initially. But I actually think that if the policy manager that we've released, if CCID is built properly and integrated into the right systems, then we can actually make compliance a feature of our industry, which is a kind of counterintuitive idea now. But if you were to understand the cost and complexity of what it takes to do compliance in the traditional finance industry, and how unbelievably painful, costly it is. Like literally to onboard a user takes months into an institution with many, like with 5 people involved. And what this can do is it can take the onboarding process from months to instant, because it can allow instant verification. And that's going to be a really big feature if our industry can build and implement it the right way. And we're really excited to help with that. So if you want to work with institutions, if you want to integrate with the great LAI system, if you want to get prepared to deal with institutional capital, please contact folks at the Chainlink ecosystem. Please look into the CCID standard and the Automated Compliance Engine. We are here to help you, the people building the future, build it into the next stage of our industry's growth with you and our industry becoming more successful. So thank you so much for your feedback on this, Alex, and the great partnership. Thank you.
Thank you. And we've released 2 papers, if you're interested, one with you to explain what we just explained, but also one with Cardano and Key State Capital on verifiable smart contracts, so how we make smart contract verifiable, exactly applying the same method. So have a look and implement. Thank you.
Thank you. Thank you very much.